Hey guys, today we're going to talk a little bit about market conditions and basically how I determine if a market is trending or consolidating. So there's a couple of tools I use. Obviously, we have trending conditions, which we love, but we don't always have. So for me, if I am clearly staying above the moving averages and there's no long periods of going sideways, this to me is a trending market condition. So in essence, what you have is you're making constant highs or you're making constant lows. So these are trending conditions, quite easy. Moving averages are handy when you're trending. As soon as you're not, moving averages don't have a lot of use. When we begin consolidating, I basically look at the daily highs and lows that are printed, and essentially if price has a hard time breaking out of a range for 3 days in a row, and when I say breaking, like if it just swept the high or just swept the low, that's not breaking to me. I want to see breaks with momentum, with imbalanced candles. I want to see price stay above or below that. So what this looks like is this would be a prime example. Here you see on the screen, price prints a high, price prints a low, 1 day, 2 day, 3 day. At this point, I could classify this as consolidating, but because price begins to break lows again, I can now classify this as trending. So now let's go and look at what we have here. So this is consolidation. What do I have here is I have a clear low of the range, I have a clear high of the range. We get a really weak break. How I can tell I'm consolidating is I'm not staying above all my moving averages. I'm not staying below all my moving averages. I'm just kind of whiplashing back and forth. So now I take my range high and I put it here. Now you have basically 1, 2, 3, 4, 5, 6, 7 days by the time this reopens. We're not breaking this high. We're not breaking the lows. And you can kind of see what the moving averages, we're just kind of back and forth, staying above and below them. This is consolidation. This is not fun price action to trade, and you're less likely to make money in it. So when trading consolidating markets, I like to trade the edges of the lows, the edge of the highs. When I'm trading trending markets, I like to trade the market rhythm, which I've made many videos on. But this essentially is the first step to identifying my daily bias, is identifying the market conditions. The second step is how I actually get my directional bias regardless of my market conditions, and I'll show you guys that in the next video.